Channa, who's the Deputy Managing Director at SKNL, joins in to talk more about how their quarter went by. Let's pull up the stock price for you and show you how it's currently doing in trade, SKNL, that is. So let's quickly join in the management then. Anil, thanks very much for joining in on the show. Firstly, your international business grew about 80% over the year. What fueled this kind of growth, and can we expect the international business to play a more dominant role going forward?
Yeah, good morning. In fact, the international businesses we have been acquiring over a period of time, and in last year actually they were with us for a part of the year. So therefore that is creating an apparent aberration in terms of the growth level. But what we've done is that we put teams who are dedicated teams, who are specialized teams for each of our foreign businesses, and they have created an entire new set of product lines, new set of offerings. And we are very confident that just as this year the performance has been much stronger, going forward the performance would be even better, whereby we could expect a much bigger growth and also better EBITDA margins.
Anil, you've managed to protect your operating profit margins for the year gone by, so great news there. But can you really sustain them at a time when interest costs are moving up, raw material prices are moving up? Will you be able to protect your margins?
See, I think that's the advantage we have, because as you are aware, SKNL actually leverages 45 brands globally. So because of being in the branded player, we are able to pass on the price increases to the consumer point, and probably that's been one of the key strengths why we've been able to actually improve our margin in spite of the raw material prices having shot up, particularly in the last 6 months. Of course, off late the raw material prices have started declining, and hopefully, because normally in a branded play there would not be any rollback of prices, so hopefully it should lead to some kind of a margin expansion for us in the second half.
What about other income, Anil? Because that has doubled this year. What's the reason for this, and what is the other
the other income
actually comprising?
The other income the other income is essentially coming out of our HMX operations, which is the US operation. Now this pertains to the licensing income, because as you know, HMX has got 36 brands, and some of these brands have been licensed out. So this is the other income which was reflected partly last year, because as I said, the HMX operation was with us for only 5 months, whereas this time it's been with us for 12 months, and therefore that is the incremental income which we are getting there.
You also plan to raise about 1,000 crore rupees via the Reed & Taylor IPO. The SKNL management earlier had indicated that it would hit the markets by FY11, and clearly that did not happen. So by when exactly can we expect the IPO to hit the markets?
See, actually we applied for the SEBI clearance, and I understand from the BLRMs that all the queries have been fully answered, and we expect to get the SEBI observation, which is the first step into getting to the IPO mode within this week, because all the queries have been fully answered, and it's probably just gone through a procedure which is going to be completed this week. And if we get it this week, hopefully, given the state of the capital market, of course we'll go on the advice of the BLRMs. Hopefully by June end we should be able to come into an IPO mode. And as far as the end users of this 1,000 crores is concerned, I think that's very clear. 500 crores is the primary issue by Reed & Taylor for its funding growth, and also for returning some of the debt. SKNL would have 400 crore secondary, and that would be used primarily to repay the term debts. And GIC, who's the 26% holder in the Reed & Taylor company, would also be selling about 100 crores worth, and that essentially would be a secondary sell-off. And that's basically to maintain some kind of a liquidity in the market to the extent of 20 to 25%.